What's up, you guys? This is Paul here from the 95 Investors Club channel. In this video, I want to talk to you about all the different factors that have been affecting the markets lately, why we're seeing a big sell-off in tech stocks, for example, and whether we're really seeing a market crash or not, okay? And also on top of that, I'm also going to show you some of the trades that I have made recently and the small changes in my portfolio and my investing strategy that I have been implementing lately and how I'm planning to use that going forward. Okay, so right off the bat here, we had a huge sell-off in Nasdaq again. They were down another 2.4% despite the already 10% drop that we saw over the last couple of weeks. But the leader today actually was the Dow, which is up 1% thanks to big moves in stocks like Disney, Cisco, and all these other stocks. Okay, so this was another classic case of rotation into value stocks. For example, AT&T shot up a lot today. Walgreens did. I could pull up the charts here. So you'll see that AT&T shot up 1.2% today. At all-time highs, it went over $30.3, which is actually a pretty huge move for a stock like AT&T. Then we saw a pretty big move in Walgreens as well. Walgreens shot up 2.7%. Again, another slow-moving stock that shot up a lot. We saw a pretty good move in Altria. Altria is up almost 4%. Disney was the biggest mover, which really helped move the Dow today, up 6.27%. That's a huge move on a stock like Disney. And the real reason behind these moves is that stimulus recently passed. Obviously, all of you probably heard of it by now. It still needs to be signed by President Biden. But the thing is, a lot of people expected stimulus news to uplift all the markets. But in reality, the stimulus really helped all the beaten down value or recovery stocks. Okay, so during the whole COVID time, it was actually tech stocks that obviously soared so much, and a lot of these value plays or recovery plays haven't really recovered a whole lot yet. And that's exactly why the stimulus news was not good news for all three indices. It was mainly helpful for the S&P and the Dow Jones. Okay, so that's exactly why we are seeing this kind of a huge rotation into these stocks. And one thing that Cathie Wood actually talked about recently is that she's seeing a rapid rotation, especially from tech stocks away from value stocks. Okay, now one interesting thing that she talked about was that, she says that this underlying bull market is actually strengthening and that she's finding great opportunities in the sell-off. Okay, so a lot of people have been talking about the market crash, how everything is selling off. But if you think about it, the S&P is only down less than 3% from all-time highs. And that actually shows you that it's not exactly a market crash. What we are seeing is actually a huge sell-off in tech only, okay? And that's where we're seeing a rapid rotation into value stocks, which was what Cathie Wood was talking about. And because there's a rapid rotation, we are also seeing a really quick sell-off even in the tech stocks, okay? Now, this also goes hand in hand with how there's a fear of rising interest rates, the 10-year treasury yield, and yields in general have been going up, and that bodes bad for tech stocks but good for dividend-paying stocks and value stocks, and that's also another reason why we're seeing this kind of a market move. Okay, so the way I have been trading is I posted a video just over the weekend about how I'm following this dividend income strategy here, where you could get into some dividend stocks that pay a pretty good quarterly dividend, but also build it up in such a way that you could also sell some covered calls on it for a monthly income and build it up in such a way that your overall portfolio can almost yield 15% on safe, low volatility stocks like AT&T, Altria, SPHD, etc. Okay, so since I'm personally very, very heavily invested in tech stocks, I've started rotating a little more into value stocks. I'm a little late to it. I'll admit that. I should have done that when the markets were still at pretty much all-time highs. So I'm a little late to the game, but I have been transitioning a little more into value stocks here just to cushion some of the blow in the tech stocks that I've been seeing and that a lot of us have been seeing if you're especially heavy on tech stocks. So I bought in a couple of shares of AT&T today, a little more of Altria in my small account, SPHD as well. SPHD is Invesco's S&P 500 high dividend, low volatility portfolio, and you can see all the stocks they hold here: ExxonMobil, Iron Mountain, Altria, Chevron, Kinder Morgan. These are not really stocks that excites people. They don't exactly, in my opinion, they don't have the brightest future. So I don't actually plan to hold them for the long term. But what I really like about them is they're stable, they're low, they have less volatility, and they pay a monthly dividend, which is what I'm excited about. Okay, so that's why I added to SPHD here today. They actually pay a monthly dividend, but quarterly is close to 0.45 or 45 cents per quarter. And you can also send little covered calls on them to add some additional income. Okay, so that's what I've been doing here, adding to some of these diversified dividend ETFs like SPHD. JEPI is another new interesting one. This is JP Morgan's equity premium income portfolio that they came out with recently. Here, this is the portfolio. Again, they're all in established stocks like Alphabet, Microsoft, Eli Lilly, Accenture, Target, MasterCard, AbbVie, etc. And these are all dividend stocks that, you know, that they pay a good dividend. But what's really interesting to me is the strategy behind this fund is that they actually sell covered calls on these stocks, on all the stocks that they're holding, and they pay a monthly dividend from that. Okay, so if you look at their recent cash payouts, you'll see that they're paying out between 26, 32, or even as high as 54 cents per month in dividends, because they're using the covered call strategy on all their holdings. Okay, so it's pretty new. As you can see, it's the first payout was not until July of 2020, so it hasn't even been a whole year that they've been around. But I find this strategy very, very interesting. So I definitely added to JEPI here. I bought into a couple of shares of Walgreens as well. So that's mainly what I've been doing here. Seeing a bit of adding a little more value stocks to my tech heavy centric portfolio. You know, normally you don't want to have too much in tech stocks, but in my case, I think about 60% of my portfolio was only tech. And personally, that's what I prefer anyway for the long term. I'm used to the volatility right now, and the reason I'm tech heavy is because that's what I understand the best. And in my opinion, you should only invest in stocks or companies that you understand the best. So if I understand tech stocks the best, I'd rather be more concentrated in that. But I think during market volatility like this and with rising interest rates, it's going to be important that you have a little bit more diversification by adding more dividend stocks and stocks that could actually do better in a recovering economy with the new stimulus as well as potential rising interest rates. Okay. So that's exactly how I've been trading and why we're seeing this kind of a pullback in the market. As I mentioned, this is not exactly a market crash. As Kathy would say, the fact that we're selling off in tech, but we are seeing a rotation in value stocks, it actually shows that it's not actually a market crash, but just a rotation. And that's actually good in terms of an overall bull market, because that means all stocks, just in different sectors, are actually getting uplifted, which is always a good sign. Okay. So again, just to show you here, NASDAQ is the one which has dropped. You know, if I look at the monthly chart, NASDAQ is the one which has dropped 10.5%. But if you look at S&P, down less than 3%. So just keep that in mind. I don't think we're seeing a market crash here. We're just seeing a rotation. And that's mainly what I wanted to share with you. Okay, so if you enjoyed this video, please do smash that like button, leave a comment below, and be sure to subscribe and hit that notification bell if you haven't already. Okay, thanks again for watching, and until next time.